The US dollar is regaining footing following a drop on Tuesday. The negative impact from the Fed's emergency rate cut was offset as Democratic nominee Joe Biden won 9 primaries in the presidential race. Today, traders are anticipating the Bank of Canada's decision on the key interest rate. Yesterday, the Fed Reserve announced an emergency rate cut before the regular policy meeting later in March. However, the effect from this move was short-lived as expected. On Wednesday, the US dollar index is again trading higher. It opened the New York trade at near 97.40. Yesterday, the euro and the yuan benefited from the broad-based weakness of the greenback. However, the euro has already lost most of its gains and is trading in the red versus the US dollar. Earlier, the dollar-yuan pair slumped to the lowest level in 5 months. However, the currency pair rose 0.5% in the New York trade. Interestingly, the onshore yuan touched a 6-week high against the US dollar in the early North American trade that signals weakness of the US currency. The greenback is still trading under pressure. Jerome Powell said that the central bank is ready for more extra stimulus, in particular further rate cuts. Donald Trump advocates for more monetary easing. From his viewpoint, the official funds rate should be at around the zero level. Today, traders are absorbing data on the US employment from ADP payroll processor and the non-manufacturing PMI from the Institute for Supply Management. Downbeat data could be another widely argument for a rate cut at the Fed's policy meeting in April. The USD cut pace trading at about 1.3350. Traders are alert to the outcome of the policy meeting of the Bank of Canada. Recent macroeconomic data have been rather decent. Nevertheless, the market has already priced in a 25 basis points cut in the target overnight rate. Eventually, Canada's regulator could follow the path of the Fed Reserve and slash the key interest rate by 50 basis points. Governor Stephen Poloz usually adjusts policy decisions for macroeconomic data. Nevertheless, it would be wrong to neglect the protracted downtrend in the oil market and growing risks. As for the Bank of Japan, it's likely to continue with its verbal interventions, putting off the actual rate cut. The lack of crucial measures in Japan's monetary policy is not the main reason behind the yen's advance, but also falling yields of US treasuries. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you tomorrow.